Hello, everyone, and welcome to the session of Open Vic, Being Money Smart, 6 things I wish I'd known about money before starting university. My name is Angela Prediger, and I'm the Associate Registrar and Financial Advisor in the Victoria College Registrar's Office. If during your degree you would like to discuss your finances one-on-one, you can make an appointment to speak with me through the registrar's office. Before this session, I hope that some of you had an opportunity to watch my YouTube video on budgeting and financial tips as an introduction to the topics we'll be discussing and covering today with Philip. We're also joined by my colleague, Jillian E. Chang, who is the Victoria College's Student Awards Officer. Jillian and I will both be monitoring the chat during the presentation, and if there are any VIC-specific questions, we can respond in the chat during the session. If you have any questions for Philip, we will also do the same thing. But now I'd like to introduce our main speaker. I'm pleased to welcome Philip Wilkins, who is a financial educator with the Credit Counselling Society with over 30 years experience providing financial literacy programs. He is a certified financial counselor. He's passionate about building strong community relationships, giving back, and inspiring others to develop good money management habits so they can afford to create the life that they want. We're grateful to have Philip speaking with us today and to share his expertise on money management and financial literacy. If you have any questions for Philip during the presentation, again, you can enter your questions on the chat. I will repeat the questions for Philip and he will respond to them accordingly. I should also mention there was a minor change and regret that we did have Amanda Martin from the Credit Counselling Society who was going to join us, but unfortunately can't, but we have the privilege of having Philip here. So that being said, Philip, take it away.
Thank you, Angela. Good morning, everybody. Yes, Angela couldn't make it. She wanted to. I'm filling in for her. Hope I do a reasonable job. She was just, so you know, she was in a car accident and she's fine. I can tell you as an ex-hockey player here in Canada, too many rings in the bell hurt and she just needed time to repair and just rest. So and she's doing fantastic. Welcome, everybody. Now, a couple quick things. First of all, during the presentation, and Angela, we'll get my screen going here in a second, right? We'll share in a minute. Everybody relax. You'll see that when I speak, I get dry. I've got a cup of tea going, so make sure you got something to relax with. And I also encourage this to be very much like a conversation. My job isn't to come here and just inundate you with a bunch of stuff and go, there you go. You know, it's about get it, look at it, talk about it, because that's a key piece. We don't have enough conversations around this topic. And I can tell you as a counselor, it's a big issue because when we don't talk about stuff, it just goes aside. My favorite groups are my new Canadians, my young Canadians. I'll tell you, I love these sessions. I've counseled many. And when my eyes light up when, you know, my participants do say, you know what, I get it. Or I might just reiterate something that you know, if you walk away with one or two things, we're doing great. Okay, so any questions, put them in the chat line. We will discuss them. And at the end, if something comes to you, please ask then and we'll do it. Okay, we better share a screen here too, right? Let's get this going. And I think we want to do this one here. How's that looking? Can you see it?
We can see it. We can see it, Philip. Yes.
Okay, just a second now. How's that?
Wonderful. Full screen.
All right. All right, everybody. So just bear with me for a second. I'm going to just cut that down so that you don't have to look at my ugly mug. And here we go. A couple preliminaries we've got for you is simply Credit Counselling Society. Where do we come from? Well, we are a not-for-profit charitable group. We are passionate about what we do. We operate for the most part across Canada, from BC right through to Ontario, with affiliates out in Eastern Canada. And as Angela so graciously said, that we're here to help, and we are the good guys. My career, and I'm that banker guy. I'm the guy that when I graduated from university, I went into for the financial services industry pretty much right away, and I've been there ever since. I'm just on the good side of the fence now. Okay, that's talking about issues and things, etc. Now, if you want to know where this is embedded from, where did it come from? I'm just going to give you a quick information here. Things happen, and quite frankly, life happens. Debt doesn't discriminate. It doesn't care how tall we are. Sometimes stuff just simply happens. What we've seen, we've got years of collecting data on this, is there are some reasons, and there are some common reasons why things can go sideways. So listen, right, you see that there's the top 7, right, from unemployment down to housing costs. And those of us, GTA, Hamilton, Burlington, Barrie, all over Ontario, housing costs, for example, have really escalated. Something you have to deal with, eventually, of course. But just so you understand that our information, what we gather, comes from this kind of data. Okay. Now, specifically, we know there's some things happening out there. Being a student myself, and I did go back to university, loved it, finally got some decent marks. I guess I could finally focus. There are some things that you're contending with, and let's face them. We know they're out there, and they're on the board. Finances are the second most commonly reported stressor among students after academics. It certainly can be. Now, I don't know what you're bumping to when you go back onto campus, if you say, and the quotes around that. I remember going in there and having financial institutions sitting in our great hall, handing out credit card applications. I still think it's a faux pas. I think it just puts too much stress on us right away, because the implications sometimes just aren't at our fingertips. We just don't quite have enough experience yet with credit to kind of grasp what that can mean. And it's even accelerated over the years. So from the time I went to school to what we're going through now, it has accelerated in terms of the impact on our credit, et cetera. And we will talk about that. And then you see, of course, the other issue we have is that the students who find finance to be stressful report the negativity on the academic success. So let's address this. Let's make sure that right now, going forward, we're going to put in our pocket some tools to make sure that you're in the best possible position to handle yourself and anything that comes your way in terms of your personal finances. What do we want to talk about today? Well, here's our hope. Number one, I hope that we're going to bring some attention to your monthly spending. And to put and saving. This is sometimes where we are, that's been a bit of a dirty word. You say, oh, I can't save, I don't have enough. Well, we're going to talk about it, because where it gets put in to our overall understanding, if it's not there already, is important now, but especially as you go along. All right. Quick side note there, just to get some concrete to this, if you will. The saving component, even just having, I would say, a small savings buffer, if you will, from a few $100s, can be the difference between making it and not. And we'll talk about that, because it's not just the money you see, it's also about the habits that we create. Super, super important. We're going to talk about credit cards for sure. We need a discussion around those. We also talk about your credit background, your credit scores. Have you heard the term? Do you know what it means? Have you ever seen your own credit file? That type of thing. Now, also, we're going to touch on repaying your student loans. I'm telling you, the ladies, Angela and company, when you are going through school, you have any questions, that group are going to be absolutely important to you, because the information that they have, the way they can help you, is phenomenal. And gotten over the last number of years, the offices that we've dealt with are fantastic. These ladies will help make sure that you've got the right direction, you know where to go. Any questions about your awards, things like that, these ladies are there. Okay. And we're going to talk on our own about a couple of resources that maybe can help you out. Okay, we're doing well. So here we are. more or less, that's the agenda we laid out. We're going to talk about budgeting, saving, credit cards. We got to talk about our credit background. For students, it is incredibly important as well. And I'm sure you know why. We're going to talk about that and the sources to help. All right, let's slow it down for a second. So far, so good, everybody. If there's any questions, let us know, but we've just got started. So number one, the big one, right? How do I manage my money? Do I have any to manage? Well, let's chat about that for a second. What are you running into? We know these for a fact. School costs money, tuition, books, fees, etc. You've got to be there. You've got to have some money for rent. Do you put insurance? Do you put insurance on your place? Content insurance, for example. Do you pay for the utilities? If so, again, these expenses that we have to make sure that we acknowledge and we plan to. You may not have them. They may be all inclusive, which is good. But a note to those that do have to pay it, it is important to keep that in mind, of course. You got to eat, right? We know that. The world don't go around without food in the belly. And food costs have risen. If you've looked at the recent stats lately in the reports in the papers, food is one of the fastest growing expenses. Now, I don't know if it's going to stay there or not. I can't say it will. Can't say it won't. But it certainly has climbed recently. As just a personal note, and as a counselor, footnote from a counselor here is that when we do budgets, we make sure that when you've got the big three that you have to pay first, of course, groceries is one of them. And even doing the bare minimum is still costing money. Now, we used to have a joke and we went to school. Craft dinner was, let me tell you, that was our staple. It was. And we discovered spices. So at least we could dress craft dinner up to taste different every time. A little more garlic, a little less, a little bit of oregano. You know what I'm getting at here. Communication, and it always was, but it continues to be a key piece of our, even our stress levels. If we can't communicate with something as simple as family, then it's our stress level will actually triple. And internet. Well, we're here today talking to be able to put on the table how important that particular piece is as well. Without the internet right now, a lot of schooling wouldn't be happening. Let's face it, a lot of businesses wouldn't be happening as well. We need to make sure we have money aside for that. Entertainment and personal goods. Now, you notice they're at the bottom of the list. Nobody ever says that they're not there, but we must remember that they are there. We make sure we allot real understanding to it and be able to admit to ourselves, yeah, you know what, I might go to a movie when that happens again, or I might rent something, I might get some flicks, I might stream a few things, and I will need once in a while to get some clothing. I don't know about everybody out there, but I know that after a little while, the socks take a beating and they got to be replaced because I've got 5 toes with 6 holes now and it just doesn't work. So we got to understand that is a piece that we have to put into our budget. It's real. Yes, we can control a little bit more maybe, but it's real. But there you go. Typical expenses. Take a look at that. Where do you fit in? Does it fit what your profile is? You may need to add something. Maybe something on here isn't quite as important or you don't hardly spend anything at all on. So be it. That's fine. But there you go. Now, that's fine. Capturing that particular piece is a great idea. And it's like step one, sitting down, put the plan down. What are my typical expenses? What can I expect? Now, let me put a question to you, and more for internal thought. Like, do you know what you're spending your money on right now? Which will also, question will evolve to, well, can you itemize it for me? Do you know what you're spending where? How do you know? So let's open that door a little bit more. This is the one piece that, and there's the Mr. Counselor coming out again, that is probably the worst the worst piece for us doing a budgeting session. In other words, not enough of us actually take the time to track it. And if I may, it can be, it can be a little ominous. We'll talk about that, but it can also be absolutely incredibly liberating. Those of you that are doing it, you'll get what I mean. You say, yeah, I know where everything's going. See, this isn't about, oh man, I don't want to see what I can't have. That's kind of the fear sometimes. I don't want to see what I can't afford. No, it's more about what do I have coming in the door? What can I use? What can I spend? And where do I need to make adjustments? But the first thing is, you got to track it. There's other ways to do it, lots of ways to do it rather. But It also will be absolutely truthful. It tells us really where we're at. But when you do this, and then we'll talk about the exercise to do this, you be absolutely agonizingly honest with yourself. I mean, just say, no, Phil, come on. You know what you're doing. Be honest with yourself. Be brutally honest. Put it down so you can see it. And it will start to show a tail for you. It'll start to show you where you maybe spend most of your money. Maybe it'll show you, and it'll start to enroll some habits for you. And I can tell you a quick snippet, okay? This is a kind of a good piece. I was doing some counseling with a fellow that was he drove a truck, and he was a McDonald's fiend, okay? And yeah, he was a sizable man too. So, and he knows that, and he had a great sense of humor, but he was a real getting a real problem. It wasn't just his health concerns, of course, but he couldn't seem to break it down. So we talked about it. We put things on paper and say, yeah, okay, that's where it should go. He couldn't get his mind around this, and he had to figure out, where's your money going. So when we discovered that it was indeed McDonald's that was his issue, it leads to, okay, when does that happen? Because if he can determine, is there a time of the day, is there a particular month, et cetera, that he prefers to go in there? What is it? And now he got some extracurricular help as well. But through also the budgeting, we saw a trend as when he was going on his long hauls. Well, what he dug into was, as a young boy, his father drove a truck and he accompanied him on this in the summertime. And he would say, okay, son, and he was really close to his dad. Okay, we're gonna stop now and get his kid a snack, right? That was always kind of a big treat. And he'd go, and they did it quite often, kept his son happy and yakking in the truck. Well, what he associated that was fun with his dad in the truck, the smell of diesel fumes. So he's driving this truck, he gets the smell of it, he's got to have himself a Big Mac. Interesting. He found it and was able to find out the habit and then start to work on it. All right. So, and essentially, what we really want to do is we want to make sure that we are in control of our expenses. We know life is a kind of a spin sometimes, but let's do the best we can to control the things that we can that are important. Okay. Here we go. Lots of different ways to do this, everybody. And the thing is, you pick what works for you. All right. If you like the good old fashioned pencil and paper, some people need to write it down and it sticks to their mind, then do it. There's resources out there. We have these things. You can get them online. You can buy them. Pencil and paper works. We have a tracking booklet. If you enjoy working with software, if you could go out shopping, keep your receipts, if you're that person, put it in a spreadsheet. You like that? Do it. Absolutely. We have a software sheet as well and we'll show you online that you can use. If you just like to use the envelope, with we call it the jar system, and put receipts in there and add them later, fine, whatever it takes. But make sure you pick the one that works best for you, that you're more likely to follow. Smart apps all over the place. Find what works for you. And in terms of the tracking, and I may touch on this again. So when you find the system that works for you, part of that system is, what will you track? Well, if you find that you write down after you know the types of expenses you're going through, and yeah, that's good, Phil, I got that, and you seem a little overwhelmed in terms of trying to track them all, little hint, pick a category, track your food, track your clothes, track your entertainment. You pick one of those if that works, and start there. Any bite you take out of this makes a big difference, and then let it work for you, okay? Now, when you're doing all this, the tracking expenses is like the first start, and that's the snapshot. And it's a piece that you need. Where am I right now? Let's track my expenses. Here I am. What do I do with this piece of information now? I'm starting to see who I am. Well, we need to convey that, or they say parlay that, into a plan. And that goes down to, what do I need a budget? Of course we do. Absolutely. What is it really? Well, I know what the screen says, and it is. It's a documented piece that shows you where you want to go, right? You want to save now, spend later, absolutely, but you want to be able to track what's going on, okay? And the piece that we need to understand too is that it's based on you, your priorities, it's your own choices. It's what you grew up with. Even a pause here. If I put out there, has anybody here that's listening to us today been involved with their household budget before they came to school? Have your parents or your guardians, whoever you grew up with, did they show you how they went through their daily or their weekly or monthly routine of paying the bills? Were you ever have you ever had the opportunity to hear them chat about what they were planning on? Are we going trying to go on a vacation? That can be a key piece. And I can tell you this: if you did, good, glad to hear it, but you're of the few. Because unfortunately, in Canada, we have got stats that suggest that we're pushing over 90% of us have had no education at home in this area at all. It's kind of sink or swim type thing. And it's just nice to get a little information before you get to that point, right? I'm going to open the door. Give me some thoughts, please. Okay. So it's important to understand that piece. In terms of our budget, we always say that this is be your own boss. This little piece is to bring forward to you that take charge of who you are, take charge of your money. And if you have money coming in, that there's different ways this can happen, because a lot of our students have to be able to finance themselves and doing other part-time jobs. You got things on the side you're working on, like with landscapers, etc. These types of places. And when we can kind of have a little internal joke and say, you're kind of employed on your own, aren't you? You're kind of self-employed. Well, how do you organize yourself? How am I supposed to be able to capture my money, keep track of it, and not give it away, and I'm not, if you will, not get in any trouble later on with the CRA? Bottom line is, if you heard this term from us, it says be your own boss. You create a system, a banking system that works for you. It may be just a single account. Maybe that's fine. Maybe you don't need anything else. But we just say, you know what? If you've got money that ebbs and flows, so you got a pile coming in and then it's going to go dry for you, like when you're back to school, for example, look at putting yourself on a small draw that's consistent every month. Also helpful for those of you thinking about when the schooling that you're going to be taking or you're taking right now will help provide you for any kind of a commission job or being an entrepreneur as you move forward. It's an important piece to know how to control your funds, because as things ebb and flow, and even some of the base paying jobs, we do get ebbs and flows. It's important to make sure that you do your very best to control that so the output doesn't outweigh the inputs. So what's coming in at least balances what you got to pay out again. All right. Now, I want to pause just here for a second, because the last line is, again, from a counselor's perspective, and something that we really work with our people to make sure that, and this is our clients, that when we go through times that are a little bit tighter, and it happens, and life is going to happen, you do our very best to deal with it. You try your very best not to use credit to supplement income, right? Now, this is where, if you heard them, Cash for You, the Payday Loan groups, this is where they've got a real cash, payday checking, cash checking establishments. This is where they really get a foothold, and they've been able to exploit this issue, this marketplace, and it does cause a ripple effect, and it can be really, from my perspective, can be financially heartbreaking, not just hard to deal with. This is where this has come into play, because let's face it, I mean, if you go through life and you've got a downturn in income, rent's still got to be paid, still got to find a way to put some food in my stomach. I need to survive. If it comes to that, we need to find other solutions, which is, again, another conversation, of course, but if we can, to supplement what we need. Okay? Credit is not the answer for the most part. And again, and the cautionary piece I use, because it can be so easy. I mean, what you have to go through today in terms of the ads, you are bombarded with it, and we see it, and I know, and I can do nothing but professionally sympathize with you. Your phone, the TV, the radios, the internet, loaded with ads that are all geared to you spend your money on them, right? You're not living unless you buy our shoes or you drink our coffee, that type of stuff. I'm amazed, everybody. I'm amazed that we have to walk our dogs or go shopping at Walmart with a Tim Hortons in our hand. I didn't realize that was a necessity. There, see, I'm showing my gray face now, but I think you all get what I mean, right? We are strong enough to be able to resist this, but if we start doing that, maybe our spending habits start to increase in those areas, and next we know, oops, you know what? I just need a few $100. I'll just tap up cash for us right now. Please resist, and if you need help, I will talk later on. We certainly have free resources for people, anybody to talk to, especially our students. Okay. So far, so good. Any questions there? Anybody see? No? if you do, just pipe in if you see anything in the chat, okay? And everybody out there, don't be shy. Remember, if you have a question, it's likely there's another 50 people that have the same question. And they're truly in this particular, especially in my area, it's not only is there no stupid questions, the questions are questions. Let's deal with them. What you're looking at right now, I'm not going to beat this one down too much because really what it comes to is it's an overview. If you want to see how that I'm your own boss, how do I make this work type of thing, simply put is if you're working, you catch your cash and you put an account that would be your business account if you would, and then you pay yourself an amount that again, which is the green layer there, that you can now dole out or out to all your various expenses. That's the idea. Okay, simple, easy, straightforward. I used this model back when I was actually in university. I was helping cut some wood and I had to become my own entity. Tough job, yeah, but I was paid a certain amount of money, and then I was paid. I expected to get there, right? So I had expenses I had to incur. Now there weren't a lot. I thank goodness because I was in school. I had enough to worry about as it was. I think I was getting ready for my third year of university, but it helped me to understand a bit better about self-sufficiency. Now, maybe I needed the education more than you did. I certainly, it helped me, and I kind of live by this. Just get my earpiece. Now, if I have to pause for a second, I don't know how you guys are doing, but here where I sit, my office is actually in Barrie, Ontario. We've got pollen out, and I had a couple of sneezing fits before I got on. So if I say, excuse me for a second, that's all I'm doing, okay? So, all right. Not just out here in the world, but how do I save while I'm in school? How do I save money? My expenses are high. Basically, my income's low. Well, let's talk about this for a second. Let's take some opportunities. On this one, I am absolutely passionate about habits. Things like every little bit counts. And everybody, please know that I also deal with people that are well into their work careers that are turning around and saying, hold on a second here. I don't have a lot, and I'm expecting to retire in X number of years. I'm looking at my savings account. I'm pretty much paycheck to paycheck. And we say, yeah, we probably should have talked earlier, but no, I can't do it now, Phil. You know what? It's going to make no difference. No, that's baloney. You can start anytime because it really, the nickels and the dimes add up. Look to ways that make it work for you. Again, when you find something that works for you, you hold on to that thing tight and you make it work. Top up the roundup feature. You've all heard of that, right? Simple process. McDonald's kind of uses it to give back to McDonald's house. Your banks, your institutions, most of them will do this. They offer a feature, and maybe you're already participating in it. That say, did something cost $1.95, round it up to $2, only nickel? Doesn't matter. Round to 3. Put it in my savings account, please. They'll do that for you. It makes a difference. Okay. Spoiler alert. When we talk to anybody that has gone through a financial hardship, and it is heartbreaking, and let me tell you, my heart goes to them all the time. We look at some of the common issues between them, and it is inability, or they haven't been able to save, or they don't have any savings account at all. I mean, even if you get a couple $100, ideally like $1,000 eventually, yeah, that'd be great to have. It does help. It's just it'll kind of postpone some things. There's a difference between getting through a situation at least or owing very little to get through it. You'll get there, but to get there, you just got to use what works. Automatic transfers. I would bet my dimes to donuts here that probably everybody on this phone right now, everybody talking on the webinar has done online banking or you participate in it, right? Of course we do. Or your institution will automatically transfer some dough for you when you have some. A nickel, a dime, a dollar, loonie, a toonie. Put it in your savings account and don't even think about it. Matter of fact, second spoiler alert for you. When we talk about budgets, and we'll get there again, we talk about what's a priority, right? I mentioned that. Of course, keep the roof over your head. And of course, remember, you have school expenses as well, but you got to keep the roof over your head. You got to keep food on the table. You got to keep the lights on and so you can study, which is cool. You got to have that. So if you're going to do it, you need to be able to rely on the fact you got a little buffer to take care of a little bit of that if you ever run into any kind of a struggle, okay? Automatic transfers help our clients get to the point where they've got a few dollars, because when they don't have it, that's when people tend to put themselves in a position to have some fairly significant financial struggles. Learning this now, talking about this now is huge. Rebate apps. You probably could give a lesson if everybody out there, if you've got a rebate app out there, use it, please. It makes a difference. Any dollar you can save out there, please do it. Challenges. I mean, there are different challenges you can do for yourself. Now, for example, it could be make a game of it when you're in a position to. We have a couple. You heard the one that is just out of reach. If you started with a penny a day and double it every day, by the end of 34, 35 days, you have $1 million. I don't know too many people that once you get about past day 10 or 11 or 12, you can keep matching that. I don't know that. But there's other things that you can do that are relatively inexpensive. Again, based on you having just a little bit of cash flow where your expenses don't eat it all up. How about the 52-week challenge? Everybody heard of that? It's a simpler version. It simply says that from every week of the year, you deposit $1 into your account that represents the number of the week. So of course, by the end of the year, it's week number 52. You put $52 into your savings account. It sounds much more doable, doesn't it? Because you can start off with 1, 2, 3, 4, etc. Or you can go backwards if it's easier to start the higher number first. The theory is you put it in your savings account, leave it there. When you're done, you got over $1,000 in your account. And sometimes it's just because it's a game, don't even think about it. Check for loyalty programs, student discounts. Everybody, please, this is about you now. Make sure you look for any student discount you can get. I was in the store the other day. I'm going to say I've still got 2 boys. I still have one in high school, and we got him some Old Navy gift certificates. And quite frankly, I found it, you know what? There was something going on there. They had some kind of rebate, some discount, which was kind of cool. But you know what? I said, we got to take advantage of that stuff, right? There's no doubt about that. Anyways, so far, okay, everybody. Angela, Jillian, no question that we can see there. Okay. On-campus events and university classifieds. I mean, you've got resources right there, everybody. Please know that is important, right? If you have opportunity to take advantage of any of that, do so. And whatever it is. The little bit about university classifieds I think is fantastic. Whatever you've got, because that piece is people in like positions where we used to share a lot of books. I'm sure that you still do, and we were done. And just FYI, nobody boo me. I got an economics. Yeah, I know it was a little tough, and those books were expensive as could be. And I was lucky enough to be able to hook up with some people that kept them in very good condition, and you get them at a fraction of the cost, of course, etc. But anything that related to that, please do take advantage of it. It is, anytime you do, remember that money actually goes directly, net in your pocket. All right. Are you convinced? Tracking expenses. Let's see where we're at. Let's set our budgets up. We're going to probably touch on that a little bit more, but we also want to make sure we don't get in trouble. Number 3, what can I do with this credit card? Well, this is another obstacle we find for our students. You have opportunity to borrow. Sorry, excuse me for that. I have a credit card in my hand. What's the implications of this thing? Well, we need to have a quick look at the cost of credit, because as we all know, you borrow money, it's not free unless it's from a friend, right? and by the way, on that, we're going to talk about borrowing the money, how and the whys about it, but let's just look at the pure cost of it. I mentioned about the payday loans. This may be of interest to you. We're going to pick a scenario here, because even though you say, yeah, Phil, I get it, it's important to put it in front of us so that we allow this to sink in just for a second. Cards do cost money, and if we don't pay attention to that, it can get away from us. We'll pick something of $3,000. Maybe we got the okay to go someplace and you want to visit, you want to go for it. And let's face it, a $3,000 vacation isn't too expensive. For me, it's out of sight because I'm not there, but it doesn't matter. What's the cost associated with a $3,000 credit card to buy that vacation for me? Book my room, book my flight, that type of thing. Well, first of all, a rate of about 20%, more or less, is a normal amount. Now, that's not the highest on the marketplace. It's not the lowest, but it's what we consider the norm. So let's go with that. That's if you got reasonable credit, you get approved. Okay, 19.9 or 20%. What's the payment they ask for on that? Does anybody know? What does a credit card company, as a rule, require to keep that account up to date? And the answer actually is 2%, okay, of what the balance is at the time. Now, This rule just came into effect just just several years ago, but the time to pay a debt is now documented on your statement, right? It would take you 52 years and change to pay that off if you just hit the minimum. Now, I'm sure that as we're talking right now, you Phil, there's no way I'm going to let that carry, which would be fantastic. But here it is in our face, so we see it for sure. You don't want to carry it too long. You want to pay it off as soon as you can, because the interest paid on this is over 12 grand, and that $3,000 card that you borrowed just to go on the vacation is going to cost you over $15,000. That's just like the gift that keeps on giving, isn't it? We can augment that though, right? So let's make an adjustment. So you see, it's important. So you just thinking that the $3,000, the terms didn't change. I'm just going to add $10 a month to whatever they ask for. So the 2% plus 10, bingo. Now you're down to 16 years. You see the impact that's got. Your income or the interest that you pay is just over $4,000, and now that credit card, now the 3,000 turns into about $7,500. Let's take it one step further. Now we're in school, we know that, so that's why we're saying we're being careful getting involved with a credit card. But if you want to be able to get at it, what if you just made one more alteration? Okay, the terms didn't change. You're just going to steady it at $120. Now, when my fingers are crossed, you get an opportunity to graduate, and you're getting the job where you have a steady income, your household expenses are not out of control, and $120, if you're getting paid twice a month, $60 every pay is not unattainable. It's in line, sounds reasonable. Now you're down to just under 3 years, a big difference. And it's only under $1,000. So now you're $3,900 for that particular vacation. What a difference. So you see, just the simple math, just a simple way of stacking this is an impact to you in the end, okay? What are some of the philosophies that you can go by as anybody, but especially a student, to make sure you don't get caught in a credit card frenzy? Number one, you don't spend money that you don't have. It is, as I counsel people and they want to get involved with credit cards again, they say, all right, if you want to, well, if you have $1,000 limit with what you spend a couple $100 on it, can you pay it off at the end of the month? Is it just a matter of waiting for your pay? So yes, I can. Can you commit to it? Do you have the willpower to do so? Yes, I do. Okay, then if you're going to use a credit card, pay it off at the end of the month and don't let that balance go forward. Once in a while, if it does, it's understandable, but for 8 or 9 months of the year, pay it off every month. And then if you have to run it up and not pay it off 1 month, make sure within 2 you got it paid off, okay? Read the statement, please, fully. Those of you that do have or will get a credit card, please make sure the statement makes sense. So far too often, you've heard about the scams running and all that. If you see charges on there that this don't apply to you, or somebody, because sometimes things will double on there. Been there myself. I've seen it on my own statements. Somebody was buying flowers for somebody for $3,000 down in North Carolina, and I live up here in Central Ontario. Good luck. That's a heck of a lover's tryst, I'll tell you, to get down there to woo somebody. That was just wrong. So please be very careful and make sure it all makes sense, because there's something on there that you don't understand. And I'll tell you that then quickly, the process that happens is you see something, you don't like it, doesn't make sense, they have an investigation unit. You just phone the number and they will get on it right away. If there's ever any doubt, and you say, oh my goodness, I think I'm being scammed, you freeze your card right away. You're not losing it. You're just not allowing any more purchases until the situation is resolved. The most part, what they'll do is they'll issue you a new number. So you get to start with, they'll transfer everything over, but you get a new number. So that particular issue, it will be for the most part taken care of. Okay. And please get involved when you do have to get one, that you don't take on unnecessary fees. Make sure the product matches you. So if, again, quick example, you have yourself, it could be a summer job, or you graduate, and I'm clap my hands for you right now, great stuff. And you get involved with a company that you need to travel for. And you say, all right, how do I get reimbursed? And they will tell you, say, well, you get an expense report, you submit it, and usually within 5 to 10 business days, we've got it covered. All right. So, but they're asking you to use your card. You say, okay, fine, I got that. Well, that means that your card, you put the monies on it. If there's the chance that you can't repay it, you're going to get the money, but you can't repay it all back again, you're going to run a balance over month end, right? So what you want to make sure is your credit card has the lowest possible interest rate that you can get. because you are going to carry a balance, even for a short time, but you're going to carry a balance. Conversely, you may have no issues. Credit card is always paid off at the end of the month. Here's the deal. You probably heard this. Credit card companies give you 21 to 25 days to pay off a new purchase, not a cash advance, they're different, okay? A new purchase without charging you any interest. Ergo, you go and you make a purchase, you run up $400 or $500 and you pay it off at your next pay or whenever it's ASAP. You don't really care what the interest rate is. Now, don't take that quite so literally, okay? But you don't care because you're not getting charged interest anyways. So that's irrelevant. So that in that case, you can take a card that may have a little higher interest rate, but is at no monthly or yearly fee, no annual fee. Whereas if you're going to carry one, you want a low interest rate, they may charge you a little bit of an annual fee, but the offset may be well worth it. Okay? We got that? Pick what works for you. Pick what you need. Pick what your personality needs, okay? And please pay it on time, okay? If you have to automate the payments. Again, all us onliners, you can make that, you can set that up very easily. Anybody has a cell phone out there that you pay on a credit card, you pay it off, you can do it in 2 payments, okay? It doesn't matter per month, that is. That is the best way to never forget, because forgetting to pay a piece of credit is the next thing we'll be talking about. It takes a hit on your credit file. And one thing for sure is, like, you got enough on your mind right now, with the marks, academics, etc. When you go to apply for some kind of housing, you don't need anybody, anything, any way saying that, oh yeah, you know what? Yeah, your cell phone didn't get paid or your credit card, you've been late a couple times. You know, you think you're a bad risk. And we'll talk about this. Do our very best to avoid those situations. Just make sure that you've got something in place to make sure that the commitments that you do have are paid on time. Okay. Use them wisely. All right. Phil, I got it. You know, you're beating you're beating my head in with this. It's wonderful. You have good information, but I've heard some questions. I need to know a bit more about what is credit. Like, there's conflicting stories out there, and believe me, everybody, you are not alone. I've got people in the credit business themselves that don't always understand it because there's misconceptions, there's untruths out there. This is what I did for a living as well, everybody. So again, if the questions come up, please feel free to ask them while you've got me now. I was
Philip, Philip.
Hi, please go ahead.
Hi, Philip. It's Angela. We do have a question from a student for
Mhm.
you. Is it better to pay your credit card right after they issue your statement or towards the end of the deadline, or is there a difference?
That is the $1,000,000 question. I don't know who asked it, but you give them a bonus, okay? Because that's exactly something we're going to talk about. Let's hit it right now.
Okay, Stephanie, great question.
Good job, Stephanie. And this is asked by credit specialists, and even they didn't get it. Now, not only did I deal with it, we'll talk about the two of them, Equifax and TransUnion, but not only did I have to negotiate with Equifax back in my previous banking life, up until now, we still talk to them. Here's the reality. When you have a credit card, so Stephanie, just give me a second, everybody. I want to build it for you, and then we'll go to the shortcut, okay? The credit is history, right? How we look at it is, do you have a product? Yes or no? What are the details on it, and are you honoring your commitment? Right? So any institution, and I'll just grab, doesn't matter who it is, like a Bank of Montreal MasterCard, what they tell the credit granting, the Equifax, the credit bureaus we call them, what they tell them, and they just hold information, these guys, is they say, from Bank of Montreal, their MasterCard, it's the $3,000 limit, and they need to know some facts about it. It was and the balance is $2,000. It was issued 2 years ago, last paid yesterday, and is it up to date or past due? See, they have to tell them that stuff. So here's the deal. It was thought for a long time that you wait for your statement to hit the skids, if you will, then to go into print so that the credit card, if you will, recognizes that there is a balance and to pay it. Well, based on what I just said, if a bank has to give those reporting and to report that data to the credit bureaus, is it not already captured? And the answer is, of course it is. Therefore, this is what I love about this. Any of us, if you're paid twice a month, every other week, once a month, you can gear your payments to your credit card based on your income. And a lot of us, since we're paid every 2 weeks, you say, start paying it right away. Your goal is to keep it up to date and pay it off, right? Every month you want to pay it off. I'm going to touch on that just a little bit too. Why? So therefore, It doesn't matter. You pay it off as soon as you can. Whether you pay it right away or whether you pay it during the billing cycle, it's going to be the same effect. There you go. That is one of the $1 million questions. And thank you for asking that one. There you go. Anything else on that? Are we okay? All right. If there is something else, Angela, let me know. Well done. Good question. Okay. Have you done a report on yourself, anybody? Do you know what it is? Have you heard it talked about? Well, if this is just a revisit, good. If you haven't ever heard of this before, this is an important piece as well. A credit report is just that. It's a detailed history of an individual's credit behavior over the last number of years. That's what it is. It's a history. Do you have credit, and what is it, and how have you been with it? Right? Now, what is on the report? Well, I'm going to tell you that there's 4 basics, and they break out like this. Number 1 is the 2 of them we'll talk are Equifax and TransUnion. Equifax, by the way, Canadian head office, Montreal. Equifax, out your way in Hamilton. So what do they hold? Well, number 1, your personal information will be on there. And if you're going to ask the question, how do they get it? They get your information as soon as you apply for a piece of credit or some entity that needs to do a background check on you, and you give them that entity explicit permission to look at it. Another very important piece, you have to give the other entity permission to look at your file. If you didn't give them permission, they shouldn't be looking at it. And we'll talk about safeguarding that just in a second too. So the first thing is personal information. That means they'll have show your full legal name in there. It'll have your address, whether you're working or a student. It will have your birth date, but again, when they reproduce it, it'll be obscured. And they will most likely have your social insurance number. Again, they'll obscure it, so whoever's looking at it won't see it. Now, the second thing it'll have is what they call trade lines. That's at the bottom. It's actually the second one. Consumer statements before it, but that's just a little piece. Trade lines is who you're doing business with. Do you have a credit card? Do you have a student loan? It'll show there, okay? Do you have a car loan and mortgage? That's what's in this. It's your pieces of personal loan business. And by the way, FYI, cell phones on plans show there. So there you go. Little tidbit number 1, we talk about repairing or building a good credit profile. Get one plan that you like. And if you have to change your phone plan, fine. Make sure the one you had gets closed down properly. Okay, because these are again a lagging issue for a lot of my young people that I know. And believe me, I get it. You're talking. If you say, "Bill, you irritate me," Rogers are in my bad books. I get it. I'm not always a fan of the biggies either. But the bottom line is make sure your piece of business is resolved. If there's a dispute, that's fine. See the dispute through to the end. But we've got people carrying 2, 3, 4 old cell bills. They say, forget it. I'll go get another one. Someone else will approve me. It does come back to haunt you, and because it will be on your file. The ones that are on plans. So go ahead. I hear you.
Phil, Stephanie again.
Mm-hmm.
First of all, she thanked you for the answer that you provided, but she has indicated that she's heard rumors about how if you request a report from Equifax or TransUnion, every time you requested the report, your credit score drops for some reason. Is that true?
Okay. Good one. You're preempting me a little bit. We're going to get to that. And the answer to that is no, it doesn't. And I'll explain why just in a second. Okay. Because we're just
Thank
about
you.
there. Well, no, you're welcome. Good. Another good question. You got to know this stuff. So when you get to, so you got it. Trade lines is who you do business with. After that becomes what they call public records. Public records is just the official listing of things like collection issues. So if one of these plans you've gone to a collection agency, it'll show in there. These do pull your score down because they're a negative. Now, I don't want to confuse the issue here, but in public records, if you went and bought a car and you had a loan from, say, Bank of Montreal, say, yeah, I borrowed money. We call it a chattel mortgage. It's just a PPSA registration. What that means simply is that the courts will say that to your file, yeah, and this is not a bad thing. It does not hurt your score. It just means that you have a registered loan, legit, and it'll show its rating in the trade lines, that particular piece of property, that car, has a lien against it. So in other words, if someone wants to buy it, they got to make sure that the Bank of Montreal is paid off. Otherwise, if there's complications if it doesn't. But that doesn't. It's not a negative. All right. The last piece is inquiries. That's where we show hard hits and soft hits. That's inquiries, everybody. And I'm going to tell you, we're going to talk about managing your file just in the next slide or two. But inquiries is really important as well, because there's two types, first of all, hard hits and soft hits. Okay. Hard hits are when you go and you apply for a piece of credit, and normally that particular entity is looking for your credit score. Hard hit. It signifies just looking for information versus wanting an actual piece of credit. Hence go back. So, coming up, I remember in this our students have a multitude of credit cards to apply for, because I'm sure to get one approved. Those inquiries could and normally will pull your score down. It's a bit complicated if you're talking to somebody who's been on the credit bureau for a number of years, because you got lots of time. Then it has a less of a hit because there's other data to pull from. Soft hits. Now, soft hits is where we're going. A soft hit means that's an entity like you looking at your own credit file that doesn't have any bearing on any credit application. You should be looking at your file once or twice a year, minimum once, and hard or soft hits have no impact on your credit score, whether it be Equifax or TransUnion. Okay, no impact for that reason. And I'll tell you. Okay, let's fast forward. It's Stephanie, if I could use you for a second. You're out there and you got your business going on. You got a couple credit cards, a couple lines of credit. Okay, things are going. What'll happen is those various entities that hold those, your credit lines, once in a while, usually it's every 3 to 6 months, they'll want to do an internal review. They're pretty much automated now, and they'll want to have a look and just double check. Probably the credit bureau will tell them, or your credit report will tell them most of what they need to know for a short investigation, short analysis. And that is, it'll reiterate your name, your job, and what the balance is on your credit, and if there's any changes in your credit status between what they had on file before and now. And it's a soft hit, because nobody else can see the soft hit but you, by the way, only you. So while Bank of Montreal is doing a soft hit, they can't see any other soft hits. Only you can. So that's the long version. So in other words, yes, hard hits will pull your score down. You're applying for credit. Soft hits, mostly analysis or review. No, they will not affect your score. Okay, there you go. So yeah,
Phil,
go ahead, Angela.
sorry for interrupting. Where can you access your credit report from Juliana?
Good question, Juliana. We're going to have it up there for you, and it's easy. It's online at equifax.ca or transunion.ca. And I'll probably revisit this again in a few slides, and we recommend this. There are free versions, and you go online, I'll tell you how to apply for them. You can also get online and pay for them if you want. You get them instantaneously, and you can look at your score if you want. Okay. Now, we recommend, if you're going to do it once a year, I recommend it. And I'm not trying to spend your money on you, okay? I'm not trying to do that, but please look at both, because not every credit institution reports to both of these entities. Equifax and TransUnion just hold your information as reported. So when you're looking at it and you're looking at inquiries, you're going to make sure that makes sense, because if you need to make a change or an update, the entities, while they can't change anything, they say, okay, well, hang on. If something's not right, did you start your analysis or your investigation? And for example, your Bank of Montreal person and Royal Bank's looking at your file. You say, why are you doing that? It could be indications that somebody's stolen your profile and they're trying to use your good name, if you will, to obtain credit on their own. Remember back a few slides ago, I said, if you are involved in credit, when you get your statement, please look at your statement carefully. It kind of ties in here, doesn't it? Okay. Now we have more to talk about. Angela, I see that you're up again. Go ahead.
I'll just ask this one more. I don't know how much longer your presentation is, Phil, but this question is regarding credit score again. Is your credit score global? Pardon me. Can an international student use Equifax, or should they use their country's main credit sites?
Another great question. The credit bureaus for every place stops at the border. So if you're applying for credit in Canada, you're going to use the Equifax and TransUnion information, right? The other stuff won't apply. The only other exception that we have is that there, from a collection perspective, where Canada and the United States has an agreement that there's a money owed at one side, they can cross the border to collect the money. But just simply applying, those ratings don't cross the borders. They're very specific to the country. Okay. Now, we are getting near the end of the presentation, Angela. And by the way, another great question. Thank you so much.
Thank you.
I'm, oh, you're welcome. Please. I will. We've touched on this other stuff, so I'm going to hit it quickly on the head so you get it. If anybody wants me to pause on something, let me know. We talked about this, and within the credit, what you're looking at is everything is categorized, and it comes down to what type of a piece of credit do you have. And it's R's, I's, and O's, everybody. So this is where your trade lines, R is revolving, I is installment, and O is basically open, or that's what a student loan is reported under, an O, right? Sometimes no terms on it just yet. I will say this, I won't go on too much about it. You just know that, all right. So at least on my report, the letter, because it gives a rating what type of an account it is. And what that means is the R is revolving, everybody. That's what a credit line or a credit card will do. Those accounts are ones that they establish a limit for you, and you can borrow against it until you go up to limit. Remember, pay it down, and you reborrow when you keep it below its limit. Right? So you have $1,000 credit card, you run it up, but you take 2 or 3 months, you pay it off. Well, you still got $1,000 limit. That's R, revolving, because that means that you don't have to keep going to the institution and like Oliver Twist, please, I want more. You don't have to keep doing that. It's already established for you. As long as you keep it in good standing, they'll keep it open for you. Right? That's revolving. And here's a little tidbit. Don't get carried away. Too many of these can really hurt you. But if you're looking to maximize credit scores, if you have an R, revolving, it means from a creditor standpoint, here's the old lender talking to you, it is the most self-managed piece of credit you can get. Therefore, because you have to, I'll get to there for, you have to manage, make sure it stays under limit and up to date, right? Just for 2, under limit, up to date all the time. You've got 3 or 4 dimensions to it. Therefore, the credit score you can obtain with a credit card up to date will outperform, if you will. You get higher scores for the I's and the O's. But they're all important. Nothing is not important. They're all important, okay? So if you're okay with that piece, you just understand they're different. Installment means like a car loan. That you don't have to manage it too much. Your payment's $400 a month. It's due on the 15th. You just make sure your money's in the account to be pulled out. It's what we call it a no-brainer in the credit world, okay? So, and O's are very similar. Now, I won't spend a lot of time here. Just know that next to that letter is how you're doing. Now, the lower this number, the better it is. If you're a 1, you're up to date. And you go right down number 9 means you've got some bad things happen to you financially. And a 9 means basically it's written off. They're not expecting their money back. And that will stay with you for a while. Okay, and that's unfortunate. What you do need to know is that you can see if you're like an R3 right now means you're 2 payments past due. So if your next statement says you do $60, but you pay the whole 60, you now become R1 because you pay what they asked. You're up to date. The history will still be on your file. Okay. And here's how this breaks out. I'll do this straightforward. Your slow credit payments will stay on your file for 6 years after date of incident. So and life can happen. So the longer you're on the credit bureau, the less impact a late payment may have. If you're just new and you're starting out and you get 2 or 3 payments in and all of a sudden you're past due, yeah, your credit score is going to take a bit of a boot in the bum. It will. It has to because it's a new report, right? So that's why it's important to stay on top of your payments, cell phones included. Okay, that's important. Now, your credit will stay on your file as long as you keep a piece open. It report and you're doing well. It will stay open for you and report well. Okay, so it's important to be careful. All right. We don't need to beat on this one too much because there's too much information on this one. Now, why do they lend you money? Anybody? If you borrow money from a family member, it's because they trust you, right? Well, if you've ever done that, at least that's what we hope the matter is, not just to get you out of their hair, right? Well, the idea of the credit bureaus is to try to determine whether or not an institution can trust us. How's our credit been? And after all we've said and done, after these letters, after the measurement, after what's on your file, they do a lot of score to you based on that information. And quite frankly, if you have a low one, it's going to be tough. Of course it is. It goes between 300 and 900 when you get a score. Nobody gets 900. It's a perfect score. Actually, a 900 would indicate a paradox of lifestyle. So we don't get down that path. But here's how it breaks out for you. So you know, if you have a score of around 600, that kind of opens the door for, we call them tertiary lenders to look at you, third level. That's, even though they say don't look at, that's like the Payday Loans, the City Financials of the world, the ones that have and tend to have the higher credit or interest rates. Okay. So that's why we're very cautious. They may approve you, but the interest rate can be very high. Sometimes it can be prohibitive from borrowing. The payments are just too high. When you get to 650, that's when the secondary or even the banks can look at you as, all right, you're an entity, you're there, you're at 650 now. You're showing that you've got some time, you've got some responsibility. We'll look at your deal now. Maybe we have to do a little tinkering with it, if you will. I mean, for example, you apply for a car loan, they might not lend you the whole thing. They require you to put some down payment down. Okay? Whereas when you hit the 7 and 750, that's when your score is at a point where the institution you're looking at are prepared to approve you based on that piece anyways, as long as you can afford the loan, because your credit score is sufficiently high and it's got enough time in it that you look like a much better risk. Okay, they're trying to make it business, but that's what the score is supposed to mean. And of course, when you're applying for anything through a landlord, they're looking at this too. They may do a soft hit in your bureau, they may do a hard hit. Notice it's a soft hit, but they will likely want to look at your score. And that's okay if you want them to, but they certainly want to look at what activity you got going on. Okay. There you go. I can't explain it any better than look at that pie chart to give you an indication of what's important to your credit score. Right off the top, you can see that your payment history. How have you been? Is the cell phone up to date? Are you keeping the credit card current? Is the biggest piece of that pie. So number one is you want to have a good credit score. You want to rebuild it. Let's get stuff up to date. Okay. Now with new students, I say don't get involved in credit unless you have to, or you got enough going on right now. As you move forward, remember this is important as you move forward, as you go. Also, how much you owe is another big piece. Don't get too many debts. School debt is one thing, but you start getting out there and getting 2, 3, 4 credit cards. You get one, and that's all you need. That's it. If you don't like a credit card, by the way, don't get one. Don't put yourself in that position because it can be negative. But if you are, don't get inundated. If somebody says I need 3 credit cards to make my credit look good, no. All you need is really the activity of one good account. A cell phone, a credit card, one of each is fine. Enough. Because how it weighs it, it'll show the limits in there. You imagine you got 5 credit cards and every one of them has got a $10,000 limit, and you're at limit with all of them. What are you at now? At $50,000, you're at maximum. And that in their eyes, the credit score says that you're more likely to, if anything goes wrong, you're more likely to go, they call it sideways, or being unable to meet your obligations and hence not make payments and to go past due. And the other one that I just want to talk about is the length of your credit history. When you're starting out, don't panic. Don't push it. It's fine. You give yourself some time to build your history and do it right, because that good, strong foothold means a lot. I mean, sometimes even employers want to look at your credit file. Now, you got to make sure that you give them a permission to do so. Anybody entering into the securities business, the banking world, and sometimes even when you get into like law enforcement, they may want to look at your credit file. Or if you work for somebody that handles a lot of cash or online transactions, they may want to see it as well. So give yourself some time to do it and do it right. Remember, the longer you're on the credit bureau, the less of an impact something like one slow payment will have on there, even though I don't want you to ever be late, okay? But just know that. Go ahead, Angela.
A question from Hazel.
Mhm,
International students come with a GIC account. Do
mhm.
you recommend us getting a credit card?
I I only recommend credit cards if you need one. Now, here's why I say that, because on a credit card, if you have the means to pay it and you need it, then it can be a good piece to help establish a credit profile. But remember this, Hazel, that your cell phone will do the same thing. And believe at one time that wasn't the case. I'll take you back, what, 5, 6, 7 years ago, when there was there's a lot of infighting. Here's my insight, because I know I was in the middle of some of these negotiations. That there was a reporting issue from cell phones that it wasn't consistent. Well, that's been cleaned up. So credit card only serves that purpose if you can afford the payment. A cell phone will do the same thing. So I don't recommend it unless you can use it and your personality says, I know that I can maintain it. So it won't have any more impact for you than a cell phone. So just take it from there. Okay, that's the best piece I can give you right now. The best piece of advice. Only if you need it, only if you have the cash flow to be able to pay it. And I say pay it off every month, please. Okay. Now, good questions. Love it. I wish we could be there in a room together. You know, you'll see my hands go. I use my feet sometimes when I talk, so just hang in there. What doesn't help? Well, if you've heard this before, if you see on the screen, if you say, yeah, I get it, please, this hasn't changed. Visa debit cards, they're just a debit card. You're using your own money. It has a Visa component to it so you can transact online, because sometimes people on Kijiji or Craigslist, they need it. Okay, that's fine, but it's not borrowed money. All right. Like prepaid credit cards, that's not borrowed money. That's your money. You load the card up, you spend it till you're down to zero, then put it back on again when you need it. Yes, it transacts business. It does not report on your credit file. Prepaid cell phones, not a bad idea. They can get some great plans, and it works for a lot of people. A lot of our clients need to switch there so that if they don't have the money, all right, my cell phone was down for a couple weeks and I'm okay with it. It's an important piece though. But in the end, prepaid cell phones do not get reported. They can be great. They can be a great product. They just don't get reported to your credit file. And payday loans, please, I was going to say, if I may, this is like the social disease of our community here in the financial world. Okay, it can be very harsh. Sometimes I hear once in a while somebody can take one and get out of it, but overwhelmingly, if you get in a payday loan mindset, it just resonates, and it's very, very difficult to get out of. Okay, they don't report to the credit bureau unless you don't pay them back and they assign it to a collection agency. Then it goes, remember, on your public record, on your credit file, and guess what? Your score goes down. Right? Be very careful. Side note, payday loans, everybody, if you've seen them, they're designed to pretty much to really kind of keep you with them. A payday loan is like a cash checking environment. That's where they were born from. There's implications of what, I won't get into that. We haven't got time as what sector they're trying to appease, but it's basically, if you get paid $400 every 2 weeks, they'll give you a $400 loan, less expenses. So you're probably about $280 walking out the door. And there you go. Whatever issue you had to address, you hopefully got enough to address it. But it's for a 2-week stint. Sometimes they have other loan products, of course, but not the paydays. When it's a true payday loan, that's what they do. So your pay comes back up, you're expected to walk back in their door and pay them back that full loan. But if you do, of course, you just see, I just blew my paycheck on you guys. I can't eat. Landlord's nipping at my heels. I got to do something. Got to pay. No problem. We'll let you go. Maybe a token little payment, but they technically rewrite the loan. Fees go back on it again. And I'm going to give you a comparison. If anybody knows what's in the Canadian, the Bank Act, there's a limit. It was in the news lately of what an institution, any lender, is supposed to be able to charge us for interest. And the right answer on that is 60%. That's right. I said 60.0. Hi, I know there's a whole other debate, and I won't get into that because it's just too gosh darn high. I agree. But payday loans, their effective rate, because they only show 20 on paper, or it's fees, their effective rates are about 442%. And that's why they're so darn difficult to get out of, because it just perpetuates itself. So please. All right. Enough on that. Any other questions, sidebars, let me know. So there we go. We talked about how to repay everything. We've covered this already. To establish or improve. Again, I'll just recap. Make payments on time. There's 3 things to do with a credit card, everybody, that will give you the maximum score for them, okay? And they all follow, and they're all no-brainers. First of all, always pay it on time, right? No-brainer, we get that. If you have the money the next day, pay it, okay? Second thing is, pay it off every month, okay? Please. If you can pay it off every month, you're in good shape. And always keep it under limit. There you go, the big 3. If you can maintain that, your credit score will grow as fast as possible under that scenario, right? If we should get a cell phone contract, if you can, keep it reasonable. Shop for what works for you, right? Make sure it's what you need. Keep it as inexpensive as possible, because they do report. And if you have a credit card and you're very careful with it, and you're just, I'm not sure about it, you can also just do a purchase on it once in a while. Just keep it low. And what does that mean? Well, when they do open up, if you want to, Uber Eats or something, and then pay it off when you get the bill in, that's fine. You're going to show activity on it, and that's what is necessary. A little activity once every month, every couple months. I encourage those that travel at one time that just put 1 tank of gas on it and then pay it off, let it go. Okay. So far, so good. And a secured credit card, well, that's just in case anybody has any issues with credit and you're struggling, or you want to get, and stepping out too. You may hear that, well, you don't qualify for one right now. Okay. Then if you do get in a position where you can save a couple dollars, and I'm not promoting this one, but here's an example. You heard Capital One, give us $75 or $100 and they'll give you a credit card. There's one here in Canada, and Home Trust, they give out this dollar for dollar. You can get a $300 limit with a $300, like it's basically it's a savings account. They just hold on to your account while you operate that particular Visa. And if you're done, if you just cash it in, so there's no risk to them at all. So, but the difference is it's actual borrowed funds. You run your limit up and you run it down again. You pay it up, pay it down. It's actual borrowed money, so you get credit for it. So I think almost lost my voice there. All right, there you are. Yeah, go ahead, Angela.
Okay, I know we're coming to an end, but we
Mhm.
have some very, very good questions here.
Good.
So maybe we can answer them, Phil, and
Yeah.
fortunately
Mhm.
try to conclude the
Mhm.
session. But we have a few questions. The first is from Joy,
Mhm.
who is asking, do you accumulate, oh, now what is she? Do you accumulate credit if you use debit card for purchase?
No, debit card is strictly a draw from your account, so it's not borrowed funds. It's just a debit transaction. Okay,
Right,
it's a smart choice. It's just nothing credit attached to it.
right. Okay. And then following that, we have another. Is one's credit score largely individualistic, or does external factors such as their parents' credit score or where they live influence one's credit score?
No, it's individualistic. Your parents,
Yes.
they have no impact on your credit score. And and the quick example of that is if you ever had a credit card and we'll do the reverse, but you allowed your parent to sign on with you and they're a co-applicant, then you're attached on that account only. Otherwise, no, there's no attachment. Okay.
Okay, and we you did talk about this, and I
Mhm.
think Joy realizes you've talked about this, but perhaps is having difficulty digesting the soft hits and hard hits again. Do you mind just very quickly explaining one more time the soft and hard hits again?
Not a problem. Yeah. Um, there's people do inquiries looking at your credit file, they have to be categorized in terms of are they meaningful and in which way. A hard hit means it takes it can drop your credit. It means you're applying for a piece of credit. That's what it really means. Okay. And the hard hit, therefore, where that's based in is that there's a scheme behind. I'm going to go as quick as I can here. It's called debt pyramiding, which is too many hits in a short period of time indicate that the individual is applying for a lot of credit, hence the potential, they call it credit seeker. And that category of applicant tends to be a higher risk. So they call them hard hits, okay? Soft hits are for analysts, for analysis purposes only, which means that there's no, first of all, they're not even ever going to look at your credit score. It's not a factor. And that there's no piece of credit is being applied for. So that's the confirmation of a soft hit. Therefore, a soft hit, while there's nothing to be applied for, and it's only for analysis, there's no drop in your credit score. I hope that helps. One, hard, applying for credit, possible credit pyramiding. Two, soft hit, analysis only, no credit being applied for. Therefore, I just want to look at it. How's that? Does that help?
Terrific, terrific. And there's one final one, and I
Mhm.
think, unfortunately, we'll have to make this our final
Mhm.
question to you.
Yep.
What is the difference between current balance and statement balance on your credit card? My current balance is higher than my statement balance. Does that mean I have to pay off current balance?
No, you don't. Your statement balance gives you the terms that you need to abide by to maintain your up-to-date status. That's the statement. Current is usually, again, it's capturing things that are pending that didn't hit your statement, which it can go both ways. It can be you made a couple purchases, hence your balance is higher. Sometimes it's lower because you made a couple payments. That's the difference. So if you're looking for keeping up to date, go with what the statement date tells you. That will keep you current and up to date. I hope that helps.
That helps a lot, is what Joy said. So
Okay.
thank you.
Good. Okay. Well, we'll wrap. We'll get to the end of this now.
Sure.
Everybody, it's been a long haul here. And first of all, congratulations to you all. Here's on the screen you see, and I was asked earlier, where can I get my credit information? There you go. There's the websites and there's the phone numbers as well. So, and when you're looking at it, the last note I've got for this for you is you've got a lot of challenges going forward right from now. Make sure that you make this piece, making sure you keep your budget in place and keep your credit at your right hand know what it is at least yearly, because if you do a check, and I don't care what it is, mark it on your birthday, mark it the 1st of January, it doesn't matter. But once a year, go to these two sources and get a copy of your credit bureau. If you're worried about reading it, don't. Entities like us, not for profit, that don't charge, is a free service. You make an appointment with us, we'll sit down and read the credit bureau with you together so you can understand it. And it will be really important too, because remember I talked about the inquiries piece, just as an FYI. If there's something on there that you don't know, and it say, oh, this could be an indication of somebody trying to steal my identity, we'll help walk you through that process and getting that looked after as well. Okay, so get one of each, not one or the other, one of each once a year, so you can be sure, you can feel comfortable and confident that where your credit stands, and you're doing all you can to help out. Okay, that's it. We had this last little piece to how to pay back these student loans. I think that Angela, based on what I've heard, is that you've covered a lot of this probably with them, or you have, and you probably all know that with the student loans is that you have a grace period. After graduation, you got 6 months, and you can apply for assistance every 6 months. And I'll again say that Angela and the staff are fantastic for making sure they direct you where you need to go to get the answers that you need here. Is that sufficient, Angela? Does that make sense?
It makes total sense, and we've covered that in
Yep.
our, and we'll be covering that throughout their academic career at the university. There will be sessions on that as well.
Superb.
So,
Okay, there we go.
sorry, are you? Go ahead.
Okay.
Phil.
Well, we're getting past that one because we're at the end of everything right now. We're done. Where can I get help? Lots of resources out there. If for anybody, you know where they are. You got us. You got your institution, and the ladies who taught Angela are absolutely incredible to make sure that you get what you need in terms of information. Okay. And Angela and the ladies know that with us, I'll get to you. We also have a website that will help supplement any other questions you may have outside of that, okay? Which is mymoneycoach.ca. Sorry, I just bit my tongue as I said that. Okay, there you go, Angela.
Well, that brings us to the end of our session today. Please join me in thanking Phil for his time and for sharing his many insights on managing personal finances in university. I hope that this information will be helpful to all of you as you begin your university journeys this fall. Thank you, everyone, and please enjoy the rest of Open Vic. I really hope that you found this helpful, and it looks like you have. We're getting many thanks, Phil, and many many comments about finding your session helpful. So
Good.
I'm pleased, and again, please don't forget to also, if you haven't had an opportunity to view the YouTube video, to do so,
Right.
and also that the Victoria College Registrar's Office is here to help you. And as I said at the beginning of the session, if you need a one-on-one financial advising appointment, please don't hesitate to make an appointment through the Registrar's Office.